Philip, this is a scenario where a lot of the uncertainty around what the president could do with Powell is maybe driving some of that angst. Is that what your clients are telling you about the current environment and what they see with inflation and everything else, and now the added variable of Trump versus Powell?
Yeah, look, I'd say the comments that that Trump has made about the Fed and sort of talking about the unhappiness with not cutting interest rates fast enough is just another dimension of uncertainty that's now affecting markets. I will say that any impact that will have will just additionally add pressure on Treasury markets overall. So it's certainly an additional uncertainty that markets are grappling with at this stage.
What is the biggest amount of uncertainty in your mind about what the markets are dealing with right now? If it's one more additional point, the feud between President Trump and Fed Chair Jay Powell, what do you think is now the driving force behind why we are seeing the kinds of volatility that we are?
I'd say, look, markets have stabilized last week. So Treasury markets, if you remember, in the week where the pause was announced, were showing some pretty significant moves. And so last week was actually a much more orderly trading in Treasury markets. We have seen perhaps the more defensiveness again in Treasury yields. But it's clear, I would say, that the trade uncertainty, in our opinion, is still the main driving force behind market uncertainty. Now, after the ECB cuts, the president then kind of pivoted to the Fed and sort of asking why we haven't seen more of a move in interest rates in the United States.
Philip, with all of that in mind, there have been at least those who argue that certain parts of the market are now becoming much more attractive. Are there places that you think are becoming much more attractive, whether it be on the equity side of things or within fixed income?
Yeah, we think markets have sold off in a number of places. Of course, overall markets are still down 10+% year to date. But we are starting to dip our toes into areas that we think have seen some weakness. So if you look at the credit markets, high yield, for example, in the 400 basis point spread levels, much more attractive than they were just a few weeks ago, understanding that there is some economic uncertainty ahead over the coming months. And there's pockets of opportunity as well in some of the consumer names. And our focus would be more on higher quality companies with pricing power that have been selling off here in recent weeks.
Excuse me. Okay, industry-wise, are there places that you feel as though could be ones that you want to stay away from in the coming weeks and months, given the idea that the market uncertainty could continue?
I think it's important to consider a wide range of potential outcomes. I think companies that have weak pricing power will be areas we'd be taking a closer look at and probably staying away from at this stage, and companies that are, let's say, singularly focused on China, for example.